In this video, traders, we'll look at more risk management ideas from big traders. Hey traders and investors, a very warm welcome to you. Okay, so this is the second part of a video I did earlier where I looked at 7 risk management ideas from big traders, 1 to 7. If you haven't checked that out, go and check it out now. This is now 8 to 14. I have found more risk management ideas from big traders, and just to put this big traders into perspective, this isn't retail guys, this isn't guys who are trading their own account. This is either prop, hedge fund or company. Prop traders we know are guys who are trading in a prop team. They have a profit split, they're funded and they get a percentage of their profits. Hedge funds, we all know about hedge funds. The final one is a company. So a lot of these are kind of company traders or bank traders. In other words, they have a different objective to us in that we are just out to make money. These guys are out to make money, but they might be hedging companies' exposure to a currency. They might be hedging a company's exposure to interest rates. They might be trying to hedge the company's consumption of oil or fuel or energy or something like that. You get the point. So, you know, maybe perhaps they're producing plastic or whatever it may be, and they're consuming X amount of barrels of oil per week. They will have a team of traders who are trying to manage that cost for them, trying to buy at the lowest possible price, trying to manage to pay not too high. You get the idea. So whilst they might have different objectives to us, they still are managing risk. They're still in charge of a hefty amount of capital. So some of these are interesting. Like we said in video 1, like I say, go and check it out if you haven't yet already. There were some interesting ones, but they may not be ones we thought of as retail traders, but from this perspective of someone who's managing money, it's all the same thing, guys. Risk management. All right, so number 8, prepare for recovery. I don't think I've heard this before. I don't think this is something that I've come across, and it's really interesting actually. Let's dig into it. So prepare for recovery means, hey, prepare at all times for a drawdown. So if you're struggling and things aren't going your way, what is your plan of action to get out of it? And now I thought initially when I saw this, I thought, well, that sounds very negative. I don't understand why they'd have that. But then you think about it. Think of it from an operational perspective of a company, right? The company, and let's say they're isolating the kind of profit or the costs involved with their energy consumption. They're saying, hey, you know what? We had to pay £4 million more last year for energy. Why do we do that? And they dig in, they say, well, actually some of our traders, you know, had some drawdown. They weren't performing very well between these kind of months. And so they focused on that and said, well, if we can reduce that drawdown by half, or we can reduce the impact of that by half, we're going to increase the bottom line by 2 million, as an example. So I get now why they will be preparing for recovery. It's like, hey, recognize when you're in drawdown and have a plan of action to bring you out of drawdown. That will have the biggest impact on your P&L longer term. Well, whilst that might not be this true for you and I as retail traders, it does make sense. It makes sense that, hey, recognize when we are having a bit of a bad spell, we are in drawdown, and have a plan of action to implement when to come out of it, i.e. reduce your position size. If that doesn't work, cut your trade volume. If that doesn't work, take a day off, review this, review that. So you've got a process. Number 9, don't fret. So reviewing past trades is fine, and that's what it's all about, but not worrying about those decisions and not worrying about how they're going to influence the future. It's learning from them purely as a logical process. Hey, learning, implement this, put that into my plan and move forward with it. It's an iterative process where we're learning rather than fretting and creating as an emotional process, which we sometimes do. We like look at a trade and go, oh, we should never taken that. We should not taken that much size. It's a bad trade, this, that, and the other. We're looking at it purely from a kind of iterative, logical perspective. Number 10, model the experience of others. So same is true for all walks of life, isn't it, guys? If you want to be the best long jumper, for example, you're going to model how the best long jumper in the world operates. Same with traders. You know, what part of this kind of channel is about as well, and part of the themes as well as kind of looking into strategy and mindset and stuff, is we look at the great traders out there. We look at the great, you know, famous traders. We look at some of the less famous traders. The idea being that both you and I can take something from those traders and implement it into our own trading. We can see a common theme that runs through the guys who are running kind of 8-figure businesses, 9-figure businesses, etc., trading businesses, and utilize some of that in our trading. Remind ourselves that this is a theme that runs through the greats. We should be implementing that. So modeling the experience of others even goes down to these guys who are assuming modeling the better traders in their team or better traders in their company, or even probably going out and doing their own research for hedge fund traders and prop traders and what have you, to improve themselves. And that's ultimately, I guess, why you guys are watching. By the way, I appreciate your support. If you haven't subscribed, doing so. But that's why you watch. You pick up little bits, you maybe discard the rest of it, you get one little nugget from a video, move on to the next, watch someone else, watch something else, read a book, listen to an article. That's what it's all about, guys. Right, number 11, select a goal. So this was very much monetary based, actually, and they were saying, hey, select a goal. I want to make 1 million this month, whatever it is. Obviously going to be dependent on the kind of assets you're managing, and then dissecting that back into what do I need to do. So that might work for traders in a specific field. I'm always cautious about setting financial goals as a retail trader because I think that you can't generally control that so much. But I always think it's very, very sensible to select a goal like, hey, I'm going to stick to my trading plan for X amount of days, whatever it may be, and then writing the thing down. Number 12, tracking your decisions. So this is very, very similar to your strategy, having a strategy and allocating a strategy to the trade that you take. So that if you track your decisions, you can then model them. And actually, I think that's going one step further. So that's like, hey, I'm not going to take this trade. I don't think that's a good chart. I don't think that's a good setup. I don't think it's that. I don't think it's that. Maybe tracking the stuff that you discard is also good because it might find and unearth gems that you could have actually taken. And maybe there's a recurring theme through that. But there's an often recurring theme, guys, talking about recurring themes through anything. If we can measure it and we can track it, we can improve on it. All right, number 13, writing your goal down. I think I already said that with number 11, but it makes perfect sense rather than just leaving it into the mind, putting it on a piece of paper. Number 14, trade out of commitment to your results. So trading with in mind of, is this the best possible thing I can do for my long-term trading success? If you're committed to your results, whatever they may be, whether that's a short-term goal or long-term goal, each decision has to be benchmarked against, is this the best decision? Is this the best course of action for my long-term success? Because very often, our minds are kind of focused on the here and the now. What's the decision for the now? Oh, it's eating that slab of cake because that tastes nice. It's not going to the gym because it makes me feel tired. It's lying in bed, all the kind of stuff that as human beings tend to do and slip into these habits. It's all about short-term gain. Same with trading. I want to take that because I want to feel good about the short-term profit I've got. No. Is that conducive to, is that the best decision for my long-term success? No, because I'm trying to run the right trades longer. Hold back, get rid of that. Don't take that feeling of excitement short term, but play for the longer game. So trading out of commitment to your results. Anyway, guys, that's 8 to 14. Like I say, 1 to 7 in another video. Risk management ideas from big traders. If you liked it, a thumbs up is much appreciated. Thank you. Bye-bye.